Okay, so today we are diving headfirst into one of the biggest puzzles in crypto right now. What is going on with Ethereum's price? Seriously, you have major banks saying it could drop back to $2,000. But then, in the same breath, other experts are forecasting it could soar to 35,000. I mean, how can they be that far apart? Well, it's because no one can seem to agree on what Ethereum even is. Is it tech? A commodity like digital oil? A new form of money? All right, let's get into it.
So here's how we're going to break this down. We'll start with the price puzzle itself. Then we'll look at the super optimistic bull case, the whole digital oil idea. After that, we'll flip the coin and look at the bear case and the major headwinds it's facing. Then we'll peek behind the curtain at how these analysts actually come up with these numbers. And finally, we'll wrap up with the final tug of war that's going to decide where this all goes.
All right, let's set the stage. The heart of this whole thing is this massive disagreement between some of the biggest names in the financial world.
And this is really the core question, isn't it? We're not just talking about a little disagreement. That's a 17-fold difference between the low and the high end. This isn't just random market chatter. It's a deep, fundamental debate about what Ethereum actually is and what it's going to be.
Now, take a look at this. The range of predictions here is just wild. You've got firms like Bitpanda and JP Morgan that see it potentially dipping below $2,000. But then you have Standard Chartered looking way out to 2030 and calling for a price as high as $35,000. And then there's this absolute outlier from a survey of 50 specialists. They see a bull case of over 100,000 Australian dollars. You know, this isn't because they don't have enough information. It's because they're looking at the same data and coming to completely different conclusions.
So let's start with the optimists, the bulls. What are they seeing that makes them think these huge price targets are even possible? Well, they're not looking at Ethereum as just a cryptocurrency. They see it as the fuel for the entire digital economy, kind of like digital oil.
And this number, $35,000 from Standard Chartered, really puts a pin in the bull case. It's not just a number they pulled out of a hat. It's built on a whole thesis that Ethereum is becoming a critical piece of global financial infrastructure. So let's unpack the three main reasons why they're so bullish.
First off, the big money has finally arrived. The approval of spot Ethereum ETFs basically built a regulated highway for institutional cash to flow in. And wow, did it flow? We're talking over $28 billion at its peak. And it's not just ETFs. You've got corporations like Bitmain holding huge amounts of ETH, and giants like BlackRock are actually using the Ethereum network to tokenize real-world assets. So yeah, this is not just a retail game anymore.
The second big reason is just Ethereum's incredible dominance. I mean, in the world of decentralized finance, or DeFi, it has $68 billion locked in. That's 8 times more than its closest rival. It is the undisputed king of stablecoins, which are basically the digital dollars that make the whole crypto world go round. And it's the #1 platform for tokenizing real-world assets, holding over half the market. This isn't just being in the lead. This is a powerful network effect playing out right in front of us.
And this chart just says it all, doesn't it? When you look at the DeFi world, Ethereum isn't just another player. It commands a massive 70% of the market. Its top competitors are barely making a dent. This is what it looks like when you have a huge head start and a deep, trusted ecosystem.
The third pillar is just basic economics, supply and demand. Major upgrades to the network have basically engineered a potential supply shock. The merge dramatically cut down on how much new ETH gets created. Then, a fee-burning mechanism has literally erased over 4.6 million ETH from existence forever. And on top of all that, nearly a third of all ETH is locked away in staking. So while demand is growing, the actual available supply is shrinking. That's a powerful combination.
This quote from Bloomberg really ties the whole bull case up in a bow. The argument is that Ethereum is becoming the trusted foundation, the core asset for this new digital world, kind of like how US Treasury bonds are for the traditional financial system. So the really crucial point here is that its value is directly tied to the growth of the entire digital economy.
But hold on, it's not all smooth sailing. For every single one of those bull arguments, there's a pretty serious headwind that could easily push the price right back down toward that $2,000 mark.
And this slide really puts it all into perspective. The bulls get excited about institutional adoption, but the bears see this huge cloud of regulatory uncertainty that could just cripple the whole system. The bulls point to how dominant the ecosystem is, but the bears point to some fierce competition from rivals that were literally built to be faster and cheaper. And while the bulls love that deflationary supply, the bears are looking at the tough global economy, where high interest rates just suck money away from riskier assets like crypto.
And this is a really key part of the bear argument. Analysts at places like Bitpanda and JP Morgan aren't just being negative for the sake of it, they're pointing to a very real threat. You have networks like Solana and Sui that are designed for high speed and low costs, and you better believe they're trying to steal market share from Ethereum every single day. The big question is whether Ethereum's head start and network effect are strong enough to hold them off.
So we've heard the bull story and the bear story. But how do analysts actually turn these narratives into hard numbers like $2,000 or $35,000? Let's pull back the curtain a little bit on how they actually value this stuff.
One of the most common ways they do it, used by firms like VanEck, is called a cash flow projection. Now, it sounds complicated, but the idea is actually pretty simple. They treat Ethereum like a business. They try to predict all the money it's going to make from fees, subtract the costs to run the network, and then they do some math to figure out what all those future profits are worth in today's money. So here's a simplified version of how VanEck does it. First, they project all the ways the network can generate revenue. Second, they take out the costs to find the net cash flow. Then, and this is the important part, they estimate how much investors might be willing to pay for every dollar of that future profit. That gives them a total future value for the whole network. Finally, they just divide that huge number by the total number of ETH tokens and work backward to figure out what a single token should be worth today.
And this is what those revenue projections can look like. In their main scenario, VanEck sees Ethereum pulling in a staggering $51 billion in revenue every year by 2030. Most of that comes from transaction fees and this other thing called MEV. It sees massive revenue numbers that lead them to a bullish price target of almost $12,000. The bears, of course, would look at this and say those projections are way too optimistic.
Okay, so we've looked at the bulls, the bears, and the math they use. Now let's bring it all home and look at the final tug-of-war that is going to shape Ethereum's future. You know, despite all the intense debate and the absolutely wild price swings, this chart from Bloomberg shows something really important. When you zoom out and look at the long term, Ethereum's price has been in a pretty clear uptrend. This suggests there's a fundamental resilience here, even when the market is going crazy. So, I think the crucial takeaway is this. Ethereum's future isn't set in stone. It is an ongoing battle. On one side, you have its incredible usefulness and its powerful network. But on the other side, you have some very real risks, from regulators, from hungry competitors, and from the unpredictable global economy. Whoever wins this fight will decide if we see $2,000 or $35,000.
And that really leaves us with the final question. We've laid out the evidence for both sides of the argument. Is Ethereum's lead so massive that it's just destined to become the backbone of the digital economy? Or are the challenges from regulation and competition just too big to overcome? The answer to that question is going to be written in the market over the next few years.